Here, I'm going to switch from the consumer to businesses now. And I showed you this chart last time around. It is shocking to see how badly smaller businesses are doing relative to larger businesses. This is net income of non-corporate, so smaller companies, divided by corporate. And you'll see we're at record lows. And it gives you, it helps, another thing that helps us understand this is what has happened to interest expense for big companies versus the SMID, or small and mid-sized companies. Net interest expense, because corporations tend to be cash rich, so net interest expense has actually come down and really hasn't been this low for almost 20 years. But look at what has happened to small and medium-sized businesses. They are not cash rich. Many are hand to mouth, and their interest expense has more than doubled. Actually, you could say it's definitely more than doubled in the last 20 years. So huge difference, and you can see this also in the operating earnings per share of the S&P 500 versus the S&P 600. 600 is, or that group it is the small and mid-cap group. And you can see since really the peak in 21, the S&P 500's EPS are up 10%, but versus the peak for the S&P 600, earnings are down 50%. And of course, this is the reason that the market has concentrated so incredibly towards just a few, a group of stocks, the Mag 6, the Mag 7, whatever you want to call them. And we do know that the rubber band is stretching for these smaller companies if they get any relief from whatever measure. And I think deregulation could be the surprise here. Regulation tends to protect larger companies. They're pretty entrenched and they have great lobbying groups. Smaller companies don't. So I think that deregulation is going to unleash more animal spirits, and we'll probably see the earnings of smaller companies start rising relative to larger companies in the years ahead, especially if, again, this administration does help engineer lower inflation and interest rates.